Thanks for joining us. We're coming to you from our global headquarters of Bloomberg in New York. Joining us today is Krishna Memani, Vice Chair of Investments at Invesco, and we're going to be talking about India's budget and what we can expect from the Finance Minister this time. Mr. Memani, thank you so much for joining us today.
My pleasure.
Let me begin this conversation by asking you about growth. We're talking at a time when India's GDP growth has been slipping. What to your mind should be Prime Minister Modi's priorities or economic priorities this time, coming as he does after a massive political mandate? What do you expect the Finance Minister to do in this budget?
Well, so the budget is somewhat less relevant. It's really more about the policy impetus that the new government has, and there are two things that they need to do. First, in the near term, finding a way of solving this liquidity crunch that is going through in India is absolutely critical. Effectively, if they don't do anything on this front, the likelihood that growth falls off even further, I think, increases meaningfully. And this is something that they can address pretty easily if they want to. And the second thing, of course, is from a longer term perspective, the structural reforms that need to be unfolded for the India to get to its manifest destiny, recognizing that there's no natural way to get there. They have to actually do a whole lot of hard work in terms of facilitating capital deployment.
There is also a serious farm sector crisis in this country, accentuated by a water crisis. There is a jobs problem. Do you anticipate this budget to be focused on the farm sector? Many people are talking about a possibility of a stimulus. Is there a case for one?
Well, so there are 2 points in that regard. First, I think the farm economy from a political standpoint, especially after this sort of a mandate, is absolutely critical. So I think they want to do that. But the problem is the fiscal flexibility that they need to be able to do that is just missing. You know, fiscal deficit is too high to begin with. They may get a boon from the money coming from the Reserve Bank, but I think it would be misuse of resources for them to be deployed for this particular purpose. So they will do something. They will do something marginal, I hope, and not go overboard in terms of widening the fiscal deficit. That would be a challenge from a long-term perspective.
On the question of fiscal deficit, if there is obviously the need of the hour, do you think Prime Minister Modi and this government will perhaps sacrifice fiscal prudence for the sake of fixing these problems in the near term? Where is the additional money going to come from? Where is the government going to mobilize additional resources?
Well, so that at the end of the day is the biggest challenge for India and it's the long-term growth story. It's about mobilization of resources, and that challenge is not going to go away anytime soon. So if you look at the fiscal deficit situation today, incorporating off-balance sheet borrowing, it's going to
delayed payments.
Yeah, it's really, really high. Having said that, I think in the global interest rate environment, people may be forgiving of some of it, but I think an excessively wide fiscal deficit probably would be quite punitive. So again, the incremental steps that they are going to take, they have to take for political reasons, but they will be incremental rather than substantial.
Every budget makes grand announcements of infrastructure projects. Every infrastructure player goes ahead and borrows from the NBFCs or non-banking finance sector. You alluded earlier to the NBFC liquidity issue. For some of them, there is a liquidity problem. For some of them, there is a fairly serious governance and a solvency problem. What do you think needs to be done there?
Well, so there are lots of things that can be done. Finding ways of providing liquidity to the market through the established financial institutions, I think, is one way. Finding ways of recapitalizing the NBFCs, I think, is another. Finding ways of recapitalizing the banks themselves, I think. So there are lots of things that the regulators can do if they have the political will. Just look at the Fed in 2008. They made up all sorts of stuff that they needed to provide liquidity in the marketplace. So if the Reserve Bank of India and the Finance Ministry wants to do that, they can find ways of doing that, and there are lots of ways to get that done.
There is also a looming or an ongoing trade war between China and the United States at this juncture. The United States has also acted against India on a few products, or to the tune of about $5 billion. One area where India is lag behind is on export competitiveness. There is obviously where other countries have gotten better. There's also intrinsic problems of competitiveness. Do you think the budget can address some of them instead of just offering duty sops and tax sops?
I think the budget will probably offer some duty sops and tax sops, but at the end of the day, that is not going to change the trajectory of exports in India. The exports in India are going to be driven by deployment of capital. It's land reform, it's labor reform, it's building more infrastructure. It's those types of things which, from a long-term perspective, will change things. But there's one cautionary note here. I think relying on exports to drive your long-term growth in today's world is a very risky proposition. And I think that is going, India has to focus on domestic growth. Well, exports are going to be important, but they have to focus far more on domestic growth than just focusing and getting enamored with the Chinese growth. That is not going to happen. It's not just about Donald Trump. The net impact of exports or imports into developed markets has been so catastrophically bad that the likelihood that countries like India or the size of India can grow meaningfully just through exports, I don't think that's it's likely to happen.
One more issue that's hogged the headlines, and that's not directly related to the budget. We spoke about the budget deficit. There are off-balance sheet items. There are delayed payments to Food Corporation of India. The question of credibility of data. There was a debate over the credibility of the GDP data as well. As an investor sitting in New York and looking at the Indian markets, do these things worry you?
Well, so of course they worry you. If you can't rely on the data, how do you make judgments? Having said that, we believe, for investors, the level matters, but the level doesn't matter. It's the trend that matters. And I think even if you assume that Indian growth is lower than what it is, Indian growth today is faster than what it has been in the past. And I think one of the challenges that the paper that you're talking about kind of raised, but it focused exclusively on the manufacturing sector, which is roughly 15–16% of the GDP. So I think there's some truth to that, but that cannot really be an overwhelming concern so that investors don't focus on the underlying growth story, which I think to some extent is self-evident.
Ultimately, the proof of the pudding is in the eating. All of what we're talking has to reflect in earnings growth. And corporate earnings in India have more often than not only promised, have been appealing and promising, but they've consistently disappointed. Now, given the backdrop of a slowing growth as well, are you less hopeful of a recovery?
I think there is no significant recovery in the cards in either growth or on the earnings front. So, and valuations are pretty high as a result. So I think from a market's perspective, this is going to be after the euphoria dies, it is going to be a pretty challenging environment. The only way it changes if Mr. Modi can create a narrative which gets the multiples higher, because the growth outlook in the 5–10 year time frame changes meaningfully. But that's a 1–2 year process rather than something that can be accomplished through a budget.
What can the market be excited by in this budget?
Well, again, I don't think there's going to be a lot that the markets are going to get excited about in the budget. I think there's a lot that can happen that can get the market dissatisfied with the budget. And I think that's probably more likely than creating excitement.
It brings me to the question of liquidity as well, Mr. Memani. The Reserve Bank of India delivered a rate cut last time. It spoke about the weak growth impulses in the economy. Here in the United States, the Federal Reserve has spoken about, or at least is being dovish in its tone compared to what it was. Given this environment, where do you think is global liquidity moving? Where is smart money moving? Is it coming towards emerging markets? Is it coming towards India?
Well, it wants to come towards emerging markets. But I think for that, the emerging market growth outlook has to change meaningfully. I think it's coming. For example, Chinese stimulus will probably deliver better results in the second half. But again, remember, what we are talking about is revamping growth to an earlier level rather than creating a new level of growth. Correct. And that is not likely to happen in India or in emerging markets anytime soon. What we are talking about is better policy support from an interest rate standpoint rather than better growth or better earnings. That's really the equity story in the developed markets just as much as it is in emerging markets.
How are you positioned ahead of the budget here in India? Would you be buying India right now? Which sectors look attractive to you?
Well, so here's what the challenge is. You know, Indian markets are very expensive, and especially the markets that you want to buy, the consumer story, for example, it is probably the most expensive market in anywhere in emerging markets, because that's where people arrive when they get invested in India. But from our perspective, we are really far more focused on specific companies rather than specific sectors. So even in a beat-up sector like bank and finance, we think we can find a good sector or good company that we think will do well. Those are the things that we focus on rather than just making a generic sector bet in the market.
What would be, to your mind, risks to where India is currently?
Well, so the risks are quite substantial. I think the biggest risk Indian markets have is valuations. You know, because of the optimism after the election, the valuations have increased, earnings are not going up. So I think, you know, a bad monsoon or no farm support, which can lead to a meaningful drawdown on consumption front, I think would be very problematic. So the growth story can be sustained, but for that, the government has to implement good policies, and you know, making sure that they provide support to the farm sector and at the same time solve the liquidity crunch that is existing in the market today, I think are two very critical things in the short term.
One last question, Mr. Memani. You know, we've been speaking about what the government needs to be doing. What do you think the finance minister should stay away from? What do you think she should not do in this budget?
Well, so the temptation would be to widen the fiscal deficit in a meaningful way. You know, recognize that while the markets may be somewhat forgiving, I think if you go overboard with that, that would be really a problematic situation. That would be a problematic situation from a long-term credibility standpoint. So maintaining some level of financial prudence. You know, if you count the off-balance sheet borrowings of the government entities and state, you know, but the fiscal deficit in India is quite wide on an aggregate basis. Widening it meaningfully to get political goals accomplished, I think would be a mistake from a long-term perspective.
Mr. Memani, we'll leave it there. Many thanks, Reed, for joining us today on Bloomberg. Thank you.
My pleasure. Thank you
so much. If you have been, thank you so much.